Ladies and gentlemen, once again, very good morning. We are able to, sort out the small technical issue that we had. Today's webinar is on latest statutory changes and updates on Q4 filing and Form 16 changes. You have to make sure that your speakers are enabled. If you're able to hear me, I'm sure your speakers are enabled. And by default, all of your mic will be on mute. So we are currently in the broadcast mode for the first 45 minutes. Until I complete the presentation, we will be in the broadcast mode, and then when we go to Q&A, we will selectively open for individuals' questions. So with this, I hope you are still able to hear me. If not, join using your computer's audio, or you can also join us using the US phone number that has been provided and the meeting ID. Yes? Okay. So today's business, right? So we are going to deal with 5 items that have been listed here. Regulatory changes and challenges over the last few years that we have seen with respect to direct taxes and specifically with respect to TDS. Decoding the recent notification and changes that have been notified by the Income Tax Department. What is the change management impact? And what are the checkpoints that we should consider, and most importantly, what is going to be the focal aspect of this webinar is questions, answers, and discussions. Friends, there is something that we all know, that sharing and learning from each other is a lot more important, is a lot more valuable than looking at a presentation. So while the presentation is going to be on the theoretical aspects, during the question answer discussion session, please share your thoughts, please have questions, please ask questions, and then we should be able to do better. So let's first look at the regulatory changes and challenges, right? We all know how we have gone. In 2012-2013, a completely dedicated department for TDS called as TRACES, the Central Processing Cell, was established. In the subsequent year, TRACES or the Income Tax Department through TRACES made it mandatory to issue Form 16 Part A directly from the TRACES website. Then slowly, I think 3-4 years ago, the online correction facility for small number of records was also introduced by TRACES. So this is all to help the small and medium businesses who want to be compliant, and at the same time they want ease of use. The fourth major regulatory change we saw is 100% rule-based electronic assessment, and this is not only for income tax, but this has now been extended to the TDS department as well. All the notices that we receive, most of the notices I would say that we receive, most of the communications that we receive both from TRACES as well as from the ITD CPC are all automated and rule based. If you look at e-filing, right, income tax returns filing has been completely automated. Even processing of income tax returns filing has become automated. If you actually look at TRACES, once we upload the data, the processing of that data has also become automated. We receive either demands or notices if there is inconsistency in data, but everything is without a human touch. Everything has become 100% rule based. So these are, I would say, on a very high level, regulatory changes that we have seen over the last 6 to 7 years, and these changes are going to continue to come until a time where we achieve at least 90 to 95% automation. What is more important, if you see, is income tax is now the biggest revenue maker for the country, right? So if you look at in 1997-98, income tax department gave 36% of revenue, 34 and a half almost percent of revenue to the government of India. This has increased to 52.75% in 2007-8, and now it is going to almost, I'm sure in 18-19 it would have already touched 60%. This is the biggest revenue mobilizer for our country, and hence you can see that we are well watched. Yes, friends, there is so much of attention from the government, from the press, from the economic people, from the experts. Everybody watches the tax department very, very closely, and hence the tax department also has to be very efficient. So if you look at what the chairman of CBDT, the recent chairman who has taken over CBDT affairs in the month of March has told, is the real intention is one, to have greater transparency, accountability and voluntary compliance. Look at our size, right? You cannot go behind everyone with a stick, and hence voluntary compliance, rule based voluntary compliance becomes very important. If you the second intention is to achieve 100% automation, so it is faster, it is efficient, and it is unbiased. So whether it is filing, whether it is processing, or any other bulk operations, you see refunds have also got automated. Right now, pre-validation of bank accounts has got automated, processing of TDS returns, processing of TDS refunds, challan correction, old tasks, everywhere there has been a lot of automation that we are able to see in the last 6-7 years. The third real intention is to maximize tax collection and revenue. See, today we are already 60% revenue earners for the government of India, and to widen the tax base or to widen the tax net, maximization of tax revenue is essential. This is on one side. On the other side, if you see, the government in its recent budget has also announced that until 5 lakhs of taxable income, there will be no tax. So when concessions or exemptions are being talked about, then there is a lot more need for tax collections to improve, and to stop leakage of taxes. The fourth real intention is impeccable, friendly, yet objective, without fear or favor. That is also something that has been told. We've seen how assessments are happening nowadays. Assessing officers say there is no need for you to come. You can use the electronic interface to submit your response. Even for the corporates, until certain extent, even for the corporates, this is the same method how assessments are being considered, and I think that is one step forward that we have taken as a country. Ease of compliance, right? So we see a lot more friendly faces. Of course, to see a larger change, it is going to take 10-15 years, but the change has, I think the change has begun. Now, with all of this, and with all of this to happen, the secret and vital ingredients, friends, is data, right? And data is going to come from where? Data is going to come from employers, right? So we were like this earlier, a lot of paperwork, a lot of work. We are not any better. Now the paperwork has reduced, but we have lot more of work, right? So I'm sure all you guys who are in the payroll, taxation, and HR space agree that that our work has not got simplified, but it has got improved. I mean increased. But with the software and with automation, I'm sure there is a lot that we all can achieve together. Now, we spoke about the regulatory changes. We spoke about what has happened largely what has happened in the last 7 years, and what are the intentions of the income tax department. with these changes, why these changes are being brought in, and all of that stuff. And I will tell you, friends, I'm sure you will also agree that these changes will continue. They are not going to stop. These changes will continue. Right? So let's look at the recent notification and changes that we are here to discuss about. So this notification is dated 12th of April. The notification discusses two items. One is changes to Annexure II data for Q4 filing and changes to Form 16 format. Right? We all do agree that we wish that income tax department had intimated these changes earlier, but they are there. We just have to live with the changes, right? Let's look at these changes in detail now. Let's first talk about Annexure II, right? I'm sure all of you know that Annexure II is a Q4 filing. In Q1, Q2, Q3, we file Annexure 1. In Q4, we file Annexure 1 and Annexure 2, right? Annexure 1 deals with TDS related data. What is the total amount that has been paid to the employee or the vendor, how much of taxes you have deducted, and what is the challan by which those taxes have been paid. So this is the data that typically goes in Annexure 1. Annexure 2 is a lot more in detail. Earlier we had 28 fields, and that typically talks about how we can how an employee's salary is calculated, right? So right from his income, his exemptions, his deductions, what is the total tax that has to be paid is what Annexure 2 talks about, right? Now we know what Annexure 2 means. Talking about the data fields, we now have, friends, 49 fields to be reported. Yes, 49. Many of you would have already looked at the notification, but for those who haven't looked at the notification, 21 new fields have got introduced. And these are not optional, friends, these are mandatory fields. Let's go into the detailed list, right? So these are the fields that have got added. We are talking section by section. So gross salary, value of perquisites, profit in lieu of salary, and total amount of gross salary received from current employer has got added in the current notification. This was not there earlier. We are now, the second set of fields that have got added are with respect to section 10. You will all remember, you all know that we would report only after section 10 information. Yes, you're all aware that we would remember, we would report only after section 10 information on Annexure 2, but now we have to report before section 10. In fact, we have to report right from gross salary and section 10. So, and the reporting has become standardized. So you can see here they have given certain data points and they want us to report in these data points. This is the second set of additional fields, 9 new fields here. The third set of additional fields is, as you would again recall, that we were not reporting breakup of chapter ATC deductions, and now we are expected to report breakup as well. So we need to report ATC, ATCCC, CCD of 1, CCD of 1B, CCD of 2, ATD, ATE, ATG, and ATTTA. All of this has to be reported separately, which was a consolidated report earlier, right? We've also seen that these 3 fields have now got added again. Reported total amount of salary received from another employer, PAN of the lender if interest on housing loan is claimed under 24B, and income under the head other sources offered for TDS as per 192 of 2B. These are the new detailed list of fields that we have to report. So let's summarize these changes. The major changes are reporting taxable amount after section 10 allowances was earlier. Now we have to report breakup of gross salary as well. No reporting of section 10 allowances earlier, but now we have to report breakup of section 10 allowances as per the data that has been provided by as per the data requirements of the income tax department. If you look at income from other sources, it was clubbed with income or loss from house property. Now it has to be reported separately. Earlier we were reporting ATC and other than ATC, just two heads, right? One was ATC and the other one was rest of other than ATC, that is completely for chapter 6A minus ATC was being reported, but now we have to report breakup of all sections under chapter 6A. Rebate was not being reported. Now we also have to rebate. We also have to report rebate as we have calculated. Yes. So these are the major changes with respect to Annexure II. Let's go to the second part of the notification, which talks about Form 16. And primarily we call it part B because this is what we generate. We are supposed to generate and issue as employer. So earlier, if you look at Form 16 part B, we had 51 fields and now we have 60. I mean, when you compare this to Annexure 2, not a big change. Annexure 2 is like 100% increase in the number of fields, but part B is better. I think the income tax department took a little bit, lenient view of Form 16 on us. 9 new fields have been introduced. So this is the detailed list, right? Earlier, all these section 10 datas were dynamic, which means, let us say an employee had 3 section 10 allowances. I would just report those 3 section 10 allowances and the total of section 10. That's all. But now they have become static, which means I have to say, okay, under LTA, for LTA under section 10 of 5, there is 0. For death cum retirement gratuity under section 10 of 10, it is 0. So it is not only reporting if there is value, even 0 values have to be reported. That is what the change in Form 16 is all about. I think we have moved from dynamic data to static data. Form 16, as far as Form 16 is concerned. We can also see that item 7A and 7B, income or admissible loss from house property reported by the employee after offered for TDS, and income from other sources. Both of these have to be separately reported now. We also see that a major part is also dedicated to chapter 6A. Earlier again it was dynamic. Under ATC, if I had value, there would be a value, and the drill down of that value that would come under ATC. Under ATD, if I had no value, ATD would not come at all, ATE would not come at all, ATU would not come at all, for example. But now 8 of their fields have become static, which means whether we have values or not, these 8 fields have to be displayed on the Form 16 Part B. So this is more of a movement from a dynamic to a static data, right? So major changes, if you see, earlier we had dynamic fields in section 10 and dynamic fields in chapter 6A. Now we have static fields for both chapter 6A as well as section 10. Please understand what I mean by dynamic. I'm sure many of you have understood, but I see 1 or 2 questions about not. So let us say if an employee has employees provident fund for an amount of 50,000 rupees, and if he has mediclaim for 15,000 rupees, right? These are the only two fields, I mean only two exemptions the employee is claiming. If it was our earlier Form 16 format, we would just report under section 80C, we would report as employees provident fund and 50,000, and 80D we would report as 20,000. Yes, and that's all. Chapter 6 is over. Only that will only be these three entries, nothing else. But now, since static fields have got added, what the department expects us to do is, okay, in 80C breakup, right? Employees provident fund, you have 50,000. 80D, you have 15,000. 80 CCD of 1, whether you have or not, income tax department wants us to report 0. 80 CCD of 1B, which is NPS or Atal Pension Yojana, if we have requirement, I mean whether or not the employee has data, it has to be reported as 0. 80E, 80U, similarly 80G, everything, whether or not the data is available, it has to be reported as 0. This is what I mean by static fields. And the same thing goes with section 10, right? Not everybody gives us HRA, not everybody gives us LTA, not for everybody we have well, not for everybody we have retirement come gratuity benefit and all of that. So only for those people for whom respective section 10 allowances are applicable, only that we would show in our form 16. But now the income tax department expects us to provide static data, right? So 10 of 5 LTA, whether or not data is there, we have to report. 10 of 10, which is HRA, whether or not, sorry, 10 of 13 HRA, whether or not there is data, it has to be reported. If there is no exemption, report it as 0, right? So this is the major change as far as Form 16 is concerned. It's not a big deal. I mean, but yes, formats, Form 16 formats has to change. You know, your software has to incorporate the revised Form 16 format and all. And then there is one more, one more question that we all have. Let's discuss that in the next section. Now, we have decoded, we have broken down the notification into two aspects, Annexure 1 and Form 16. And we have dealt with the changes in Annexure 1, sorry, it's not Annexure 1, I'm so sorry, it is Annexure 2. And we have also dealt with the changes in Form 16 Part B. Now let's look at the impact of this change management, right? I mean, the impact that we are trying to assess is not on a transactional level, but more on a situational level. Transactional level impact will be different for different companies, will be different for different size. Let's say you are a 10,000 employee, 10,000 employee employer, then the impact of change management will be different. If your payrolls are outsourced, the impact of change management will be different. If your payrolls are run in-house, the impact of change management is different. If your payrolls are on a cloud-based payroll software, the impact of change management is different. So transactional level change management is not going to be discussed today. But should you have any specific questions with respect to transactional level change management, please feel free to discuss them in the Q&A section, right? Let's look at the situational level change management impact. So my guys are, I have two people sitting in front of me and they keep prompting me, please go slow. Sorry friends, I'm just so excited to be there with you today, and hence the speed. But yes, I got the signal. I'll go slow. Okay. Impact analysis. So as you saw, there is increase in the base tax exemption that is being provided, right? 2 years ago or a few years ago, we only had a flat rate of 2.5 lakhs as non-taxable, right? After 1 year, 50,000 got added, So 2.5 lakhs plus rebate of until 50,000. Then, sorry, that is 1 lakh. So until 3.5 lakhs, if you have total income, it is not taxed. Taxable income. Yes. Now this 3.5 lakhs was applicable until last year. If you see in the current financial year, we see that the 3.5 lakhs has now got increased to 5 lakhs. So 0 to 2.5 is the base slab, but anybody who earns until 5 lakhs typically need not pay taxes. Now, when the government is giving these facilities for the small taxpayers, right? They call this category is called as small taxpayers. They obviously want to ensure that it is being utilized properly and there is no misuse. And friends, we all know where misuse happens, right? We see investment proofs, we verify them, and we know what misuses happen. So majorly the misuses are happening in Section 10 allowances, particularly in HRA and LTA. I mean, I still remember a case that came to me 7 years ago when I saw an employee submit, at a particular large organization, an employee had submitted a taxable to go from Chennai to Kashmir and come back, right? And the LTA was for a value of around 46,000 rupees. And the trip details showed that he spent 6 days going to Kashmir, and he spent only 2 days in Kashmir, and he spent 6 days coming back to Chennai. Right, so 6 plus 6, 12 days of traveling to stay for 2 days in Kashmir. We know by all accounts is not a genuine bill or a genuine case, but anyway, records have to speak. So that there is a lot of misuse of Section 10 allowances happening. I was recently, we were hired to audit a particular company's payroll data for the last 3 years, and we saw that the company has been incorrectly providing reimbursement, deduction in Section 10. You all know that reimbursements are not even a part of your gross salary, right? They are not even part of 17 of 1. How can you bring it in Section 10? There is no section under Section 10 which talks about reimbursement of mobile phones or reimbursement of XYZ things that are usually provided by IT companies. Yes, food vouchers, it's a part of a perquisite, and as long as it is within that value, the perquisite is considered. The second thing that we also see is reduce the misuse of Chapter 6A deductions. So that's also equally important. And right, so now with this additional data that is being asked by the IT department, it is actually to reduce the misuse of Section 10 and misuse of Chapter 6A exemptions. Now we are also certain that CPC along with traces will match this. Values reported by employer in Annexure II with values filled by an employee in their ITR. Friends, let's understand that earlier the matching was only with 26 years data, right? It was not with the data that was reported in Annexure II. It was not about the data that was reported in Annexure II, right? So no change. So have a look at it, right? Earlier, Income Tax Department was only matching Form 26A's data with the individual's income tax returns filing, but now the employer has to make sure, the Income Tax Department will start rule-based comparison of Annexure 2 data as well. So let's say if the employee has not submitted or is claiming certain exemptions only in the income tax return and not at the employer side, it is fair to expect questions from the Income Tax Department. So it is imperative that the following is matched, right? Amount paid or credited in Annexure 1 of Q1, Q2, Q3, Q4 should be equal to gross salary total in Annexure 2. So there is some issue with hearing my voice. I'm just trying to mute and unmute myself. Am I better now? I hope I'm better now. Okay, great. Thank you. Thank you. Yes. So thank you all. That was so kind of you. So what I was saying, that it is imperative to match the amount paid credited in Annexure 1 of Q1, Q2, Q3, Q4 with the gross salary total in Annexure 2. Gross salary total is the total of 17 of 1, 17 of 2 and 17 of 3. 17 of 1 is gross salary, 17 of 2 is profit in lieu of salary, and 17 of 3 is perquisites. Sorry. 17 of 2 is perquisites and 17 of 3 is profits in lieu of salary, right? So the total of these three has to match with Annexure 1 amount paid credited. That's very important. So this is one positive match that has to be expected. And the second positive match is the TDS value that you have already reported in Q1, Q2 and Q3, and you are going to report in Q4 Annexure 1 has to match with the total TDS deducted value in Annexure 2. Now this is extremely important. If this is not accurate, then you can expect your employees to positively receive either notices or incorrect TDS credits, right? Either the employees will receive notices or they will receive incorrect tax credit, both of which is not good. Both of which is not good, right? So I think it's imperative that we understand this. With the greater requirements of Annexure 2 data, I think this point has become all the more important. What else? Now, when you are going to accumulate, how do you accumulate data for accurate data for Annexure 2? So you have your gross salary, then maybe you have your internal entity transfer cases, you have your FTC cases, FTC is foreign tax credit cases, and then you have your ESOP and ESPP and all the RSU cases. All of this data has to get accumulated to report 17 of 1, 17 of 2 and 17 of 3. Another, I think, another important impact that we can anticipate is, since this notification, Traces and NSDL both are working on a new FVU version. If you file before 12th of May, you can still file in the old version, but after 12th of May, it is mandatory to file in the new version. I mean in the new format of Annexure 2. So if there is a delay from NSDL side in releasing the FVU version, I think there will be a slight delay or bottleneck in filing Q4 returns. This may also lead to a delay in Form 16 issuance, and this is particularly for those large employers. You have 35,000 employees, you have 10,000 employees, you have 5,000 employees, any size which is above 3,000 employees, Traces considers you as a large employer. And for those large employers, the priority that Traces takes for processing your return and processing the request for Part A is low. Right, so that I think is very important, that it may also lead to Form 16 delay in issuance of Form 16. So let's just make sure that, you know, have the data as ready as quickly as possible. The minute you have the FU version released, you know, just make sure that you are able to file your ETDS returns quickly, so that you can make sure that Form 16s are issued on time. Now the question is, will traces give us Form 16 Part B? I think a lot of people, I mean, traces already has sent out a communication. You know, I'm sure many of you have received this communication. Can you can look at the communication. It was sent out on the 8th of May, that TDS certificate Form 16 Part B, which shall be available for download from traces. So this is not a this is not an error. This is not Form 16 Part A. It should not be Form 16 Part A. They've actually, you know, they are trying to bring Form 16 Part B from traces as well. So it's very simple, right? They are already getting all the data which is relevant in the Form 16 format, and it becomes a lot more easier for the employee as well as for the employer if there is one single entity which is giving us all these all these formats and forms and PDFs. And here traces has already sent out a communication as well, but the notification does not talk about issuing Form 16 Part B from traces. So what is right? Should we issue Form 16 Part B from traces? Should we issue Form 16 Part B from our system? That's the question. And the answer, yeah, and you know, my colleague tells me that there are a lot of questions with respect to this on the chat box. I'm just wondering, should I tell you the answer now, or should I make you wait for a little more time until we go to the question answer session? Anyway, I'm you know, we all know what the answer is. The answer is that it is not mandatory for us to issue Form 16 Part B from traces. It is optional. It is optional. It is not mandatory. Right? So absolutely, Form 16 Part B from traces is optional for the current year. We do not know, I mean, we anticipate that next year it will certainly be made mandatory. Next year you can be rest assured that both Part A as well as Part B is going to come from traces only. Currently, you know, since due to paucity of time and all of that, I, you know, that there is it has not been made mandatory. So I think I've answered many of your questions. Let's go to the next item. Yes, so this is what I told you, that currently Part B from traces is not mandatory, but next year please be rest assured that it will be mandatory, right? So I think that's very important about the traces communication. So you lot of our own clients, you know, we do payroll processing, and we do payroll lodgement for large enterprises and small enterprises. So you know, what we understand is, though Part B may be made mandatory from the next financial year, it is not going to reduce the reduce the work of the employer, because the employer has still needs to provide 12BA, still needs to provide Form 12BB, still needs to provide Annexure to Form 16. Right? Both of these still have to be provided from the employer. So currently what we are doing is, from traces we are downloading Part A, and from our payroll software we are generating Part B, Annexure to Form 16, Form 12BA and Form 12BB, all of this, right? So there are two different attachments an employee is receiving, which is digitally signed, you know, depending on the convenience of the employer. Now, this year it is optional for us to issue Form 16 Part B from traces. Next year this certainly may be made mandatory, but what is very important to understand is, the work of the employer has not reduced, my friends. We still have to issue Part B, 12BA. We still have to issue to Form 12BB, which was made mandatory from the year 16-17, and we still have to issue Annexure to Form 16. Annexure to Form 16 is nothing but the breakup of the gross salary, 17 of 1 gross salary breakup, right? Of course, annexure to Form 16 is not mandated, but we encourage it as a payroll outsourcing vendor and as a payroll lodgement vendor. We have always made sure that all of our clients' employees get annexure to Form 16 because that is necessary for them to accurately file their income tax returns. Now let's talk about certain checkpoints to issue accurate Form 16, right? Ensure that the income paid under different heads are taxed appropriately, which means if you are paying something as HRA, it has to be taxed as HRA under Section 10 of 13. A reimbursement cannot be taxed under Section 10. A perquisite cannot be taxed under Section 10. Ensure that exemptions and deductions are provided as per Income Tax Act and proper documents and evidences are available. So this is more about, the exemptions that you are providing: ATC exemption, ATD, ATE, U, G, H, from A to Z of 80, which forms the Chapter 6A. And then our Section 10 allowances that we provide exemptions on, and the house property exemption that we provide, all of that. Right, so proper documents and evidences are available. We have seen a lot more scrutiny of documents. If an employee is applying for a substantial higher amount of TDS refund, the income tax department is actually asking employers to submit what and all documents has been submitted by that specific employee. We have seen this trend, and this trend is only increasing from the last 2-3 years, right? So you will be held liable if we do not have these evidences. As per the Income Tax Act, we are supposed to archive all these evidences for a period of 7 years. I hope we are all aware of that as well. Income and tax deduction have to be reported properly in ETDS filing. We saw last year and the year before that there are a lot of communications that are being received by employees asking them to confirm some details, and you know what, once an employee receives a communication from the income tax department, the employee by default thinks the employer has made a mistake. Right, and it is the employer's responsibility to solve that notice or to solve the communication. Now, unfortunately, that is not the case, but we also need to understand that if we are able to appropriately report or file data during Q1, Q2, Q3, and Q4, it is very important that we are able to do income and tax deduction databases. Part A of income, Part A and TDS should match with Part B. I think that's also very important. Now, certain things about preparatory activities for accurate filing of your Q4 Annexure II data. Please undertake an audit between income and TDS of Annexure I with Annexure II. It is very, very important to to total your Q1, Q2, Q3, Q4 data and verify this total with your Q2 data. If there are any changes before you file Q4, please undertake correction for previous quarters before you file Q4. Ensure all employees should be present in Annexure 2 for downloading Part A. So let's say you have an employee who is available in Q1 and Q2 and Q3, but you have missed reporting them in Annexure 2 in Q4, you will not get Part A for that employee. So please make sure that all employees are available in Annexure 2, even if they have worked with you for 1 month or 2 months or a part of the financial year. But yet you are required to give them Part A, and those employees need to be there in Annexure 2. audit between Annexure II data and Part B data, which now will be a lot more simpler because both the data are fairly similar. Until previous year, they were not similar, so this audit was complex, but now it will be a lot more simpler. PAN master has to be validated, right? You have your employee dump, you have the PAN numbers. Not only will that employee not receive tax credit, but you will also receive notice for incorrect PAN reporting, which is bad, right? So make sure that every time you onboard an employee, PAN is validated with Income Tax Department's website, not the structural validity of the PAN, but it is actually validated whether it is valid or not. There should not be any tax payable in Annexure II. Tax payable not even in single digits, my friends. It has to be zero or a minus figure as a refund. No tax payable should be there. Wonderful. So that's what we were talking about, and here is where my part of the presentation is over. I have taken 5 minutes extra. The time allotted to me was 45 minutes, but I think I took 50 minutes. I'm sure those additional 5 minutes were of use. We will now start taking question and answers, and friends, the very friendly faces that you've many times seen. Radha, who's the manager of Edita, and Preeti, who's senior executive at taxation, is going to ask question. I mean, is going to be the panel to answer your questions, queries, and all. So, how do you ask questions? Please use the chat box to ask us questions, and we will read out the questions and respond to each of it. Please use the chat box. Please use public chat, no private chats, please. Yes, we will start taking questions in a couple of in 1 minute. Yes, we see that there are a lot of questions coming up. We are going to take those questions one by one. Over to you, Radha and Preeti.
Hi everyone, good morning. We are receiving a couple of questions with respect to the topic that we are discussing today. And there was a question with respect to digital signature, whether digital signature is, what about the signature on the Form 16? So there is no change with respect to the digital signature. So whatever we were doing till last year, the same that we are going to follow for this year as well. So we have to affix a signature in Part A and also in Part B. So there was no change on that. And there was another question with respect to whether we need to report gratuity payment and exemption reporting. Yes, absolutely, sir. We have to report whatever the Section 10 exemptions that we are providing to employees, whether it is a retirement benefit or any other things which will come under Section 10 allowances. We have to report. We have to report in the ETDS filing and as well as in the Form 16. And the next question is whether previous employer income is compulsory to report in Annexure II and Part B. If you see companies, they take the previous employer income only to calculate TDS. I mean, only to calculate the correct TDS, so that the latest employer can deduct the correct amount of TDS, so that employee don't have to pay any additional TDS while filing the returns. In that case, if you are taking the previous employer income only for tax calculation purposes and you don't want to report in the Form 16, that is okay. It is not mandatory that you have to report in the Form 16. So if you don't want to report in the Form 16, you also don't have to report in the Annexure II filing. In this case, the tax for the employee will be shown as a refund, but while he or she is going to file the returns, they have to collect their income and then they have to report both the income and the tax. And we have seen, we have received another question. Is it compulsory to issue Part A and Part B to employees whose TDS is not deducted as they are not liable to tax? Yes, it is not mandatory that you have to issue the Form 16 when there is a no tax liability, but it is recommended to issue the Form 16 because employees need the Form 16s for many other purposes, like when they go for a loan or whatever other reasons, they have to provide the Form 16 as an income proof. So it is recommended to provide the Form 16 for all employees, whether or not they have TDS or tax liability. This is what we do for our clients, and we also recommend the same to others as well. I think we have received another question with respect to the same previous employer. Sir, we have answered that particular question. If you still have a question, please let us know the particular part of it so that we can able to answer. There was another question whether there are only 200 count of employees, will this whole thing is applicable to us and we can do the return. Yes, it is applicable for everyone, sir. It is not only for more number of employees in the concern. Whether we have 10 employees or 20 employees, the change or the compliance is applicable to everyone.
So two conditions, right? One, 10, and second, if you have deducted TDS.
Yeah.
Even if it is for one employee, it has to be done.
Yes, so as Mr. Akash is telling, if we have a TAN number, or if we have, we should be having a TAN number because we have a 200 employees in the company. So whether it is 10 employees or 15 employees, if there is one employee who will come under tax liability, we have to apply for the TAN, and we also have to file the returns for all employees. It is, I'm talking about the quarterly ETDS returns. So it is applicable for everyone.
Matrices to require and to employer on an individual employee. Okay.
So we have received a question what amount return is considered by traces to inquire on an individual employee.
The value. So I think Arvind, what you mean is what is the return is considered. I think what you mean is what is the value of the tax refund that will be considered for scrutiny is what you mean. I think anything above a substantial portion of that individual's tax refund. Let's say if they are going to claim more than 30 to 40% of the individual's tax deducted will be taken up for assessment. Will be taken up for further scrutiny. So let's say my total tax deducted is 10 lakhs. And if I'm going to claim a refund of 3 lakhs, which is 30%. So that is going to be taken up for assessment. But there is no hard and fast rule that it is only going to be 30% or it is only going to be 20% or any of that. Currently, I think it is between 30 to 40%. Arvind, I hope I answered your question. Going forward, will the employees themselves?
We have received another question from Mr. Vijendra. Sir, your question is very valuable, whether employees can able to download their Part A and Part B in the future. We also hope the same, but there was no communication with respect to it. Currently, employees have to refer their Form 26AS for the tax credit. Maybe not in the immediate next year, but I think in the future we can expect the same thing where employees can do all these things by themselves. There was no necessary that employer has to provide something like Form 16 in the future, but not immediately, sir. It will take another 2 or 3 years. There was a reply question from Sohali for Form 16 issuance for all the employees. where I mean, if the employees don't have TDS credit, I mean TDS liability, we can also include them in the QETDS filing, so that we will also get the Part A for those employees. So if you issue Part A and B, it will be well and good, or you can also issue Part B, because it is not mandatory. It is anyway we are providing it to the employees. But if you issue both of the Form 16s, it will be great. If it is not possible, at least please issue Part B. There's a question from Mr. Satish. Can we issue old format if we file? If we file Q4 before 12th May? Yes. We can file the Q4 returns before 12th in the old format. But if you are planning to issue Form 16 after 12th, you have to issue in the new format, because the change is effective from May 12th. So whether you do the QETDS filing or the Form 16 issuance on or after 12th, you have to issue in the new format. There is no change in that.
Which means if I file my QETDS returns on 10th May,
yes,
and if I issue Part A and Part B on 12th May, I can still issue it in the old format.
No, 12th is you have to issue the new format, because it is effective from 12th.
Until 11th May, I can still issue in the old format.
Yes.
But let's say if I'm going to issue on the 13th of May.
Yes.
If I'm going to issue on the 13th of May, though I have filed the QETDS returns in the old format, still I have to issue Form 16 Part B in the new format.
Yes.
Because the new notification will come into effect from 12th May.
Yes, you're right. Yes. Hope I have answered Satish's question. There is another question from Srinivas about the difference in amount of Annexure 1 and 2. But if employee has this deduction in only in 1 month and no deduction later, but difference would be there between these two, what is the solution?
The difference in amount of Annexure 1 and Annexure 2. But if employee has deduction only 1 month and no deduction later, but the difference would be there. What between these two? What? See, actually, Srinivas, the expectation is that whatever data that you have filed in Annexure 1 has to match with Annexure 2. That is the expectation, right? So there are two fields which are very, very important. One is your amount paid or credited, and the second field is your TDS deducted. Now, if you total the amount paid or credited for all the 4 quarters of Annexure 1, it has to mandatorily match with Annexure 2. The same way for TDS deducted. All 4 quarters you total TDS 4 deducted from Annexure 1, it has to mandatorily match the TDS deducted in Annexure 2, right? If it is not matched, then you will get a notice. That is the problem. But we are unable to actually understand the question. Srinivas, why don't you call us or write to us? Rather, can you tell him your email ID so that he can get in touch with you?
Yeah, sure. I'm just writing an email. I am just giving you my email ID. You will receive it from Preeti.
So you can write to us, Srinivas, separately so that we can understand your question better.
Pramesh sir, there is a question from Mr. Pramesh. For claiming HRA, landlord PAN not provided by employees, so they've collected no PAN declaration, whether there is an issue in that case. Previously, till last year, we had an option to choose this declaration option while filing Q4 returns. Since this is a new change and we are yet to receive the FU version, which we are expecting on 12th May, so we can able to confirm you on this only on 12th, because after we receive the new FU version. Because previously when we have received the previous notification with respect to Form 12BB and they made this PAN number mandatory, in that point of time, the notification did not mention anything with respect to this no PAN declaration. But still, in the filing format, in the FU version, they have given an option for for mentioning this declaration thing. So we are also expecting the same thing for this year as well, but we can confirm only after we see the if you change, sir. Not right now. I'm sorry.
But even just adding to Radha's point, I think even the recent notification has very clearly stated that PAN is mandatory where the rent is exceeding 1 lakh. These are the actual wordings available in the recent notification. Of course, we will share all these notifications and this PPT as well after we complete the webinar. But if this has been very explicitly mentioned in the notification, I am sure no PAN declaration may not help this year. But let's see, let's see. As Radha said, we have to wait for the FU update. So there is another question from Arvind. What is the maximum amount a refund of an individual dress is considered? So as we discussed, Arvind, this is very subjective. Right now, I think anything between 30 to 40% of the total tax deducted, if an employee is claiming as refund, the case will be taken up for scrutiny. But these numbers vary. I mean, it's not a hard and fast rule that it has to be 30 to 40%. I mean, there are a lot of permutations and combinations. But the best thing currently what I see best is for them to declare whatever applicable exemptions at the employer. So I think that is the best thing to do.
Yeah. So the next question is from Mr. Keshav. We have downloaded part A from traces but are yet to generate form 16. What challenges will we face post 12th? If you are able to provide the form 16 part B also within 11th, you will not face any challenges. Whatever is the old format that you were following, you can issue it, no issues. But if you are planning to issue the form 16 on or after 12th of May, you have to issue the you have to issue form 16 part B in the new template. So there is no change on that.
Mr. Vijendra, we have a graduate interest. Do we still need to report the income and exemption? So gratuity trust is a different entity altogether, and the payment of gratuity to an employee is a completely different business altogether, right? So the gratuity trust reporting and compliance you are going to do anyway. That is different. Now the question is under whom will you report, right? So if when you have a gratuity trust, obviously you are not going to report it in Cisco's Form 16. You are going to issue another Form 16 from the gratuity trust. If you have deducted taxes from the gratuity trust, you are going to issue part A and you will also issue part B. But let's say if you have not deducted taxes, then you will only issue part B. And let's take a case, for example. Let's say you have given him a 5 lakh rupee gratuity, and this 5 lakhs is completely non-taxable. If this is the case, then this is how we have to report. Your gross salary under 17 of 1 will be 5 lakhs. And under section 10 gratuity cum retirement benefit, under I think it is section 10 of 15 if I'm right, is 5 lakhs, right? So income is 5 lakhs and then exemption is 5 lakhs, so the sum is 0, and hence there is no tax liability. So this is a Form 16 part B. Separately we will have to issue from the gratuity trust. We don't have to include this as income from your employer or the employer that you represent. I hope I'm clear, Mr. Vijendra. In Annexure II, ATDD and DDB column. Can they be clubbed under ATD? No, actually, I think others, right?
Um, Sir, in the Annexure II template, there is no separate column for ATD and DDB, but there is a column for others. So we have to mention in that column for all other, wherever we don't have a separate column for the Chapter 6A sections, we have to mention it under others column. We cannot club it under ATD because ATD have a maximum limit, so we cannot club it with ATD.
One of our employees' filing has been processed and it shows outstanding tax demand. What should be our next step? Padmajas, please ask your employee to meet a tax professional. That is the next step. Because if there is an outstanding tax demand, it could be for various reasons, and it is not. See, employer can be one of the reason, but an outstanding tax demand can be for various reasons, even other than the employer. What we believe is, Padmaja, that an actual tax professional should have a look at his papers, and if he tells that this is a problem with your employer, then you have to look at it. Until that, you don't have to look at it. Is what I would say. But as another further step, what you can do, Padmaja, is to verify whether the TDS that you have deducted for that employee is reflecting in the Form 26 years of that employee. If you do this check, then there is nothing that is that is at fault from your side. The fault is at their side.
There was an interesting question from Sohali. There was no TDS deducted in Q1, Q2, and Q3, but we have deducted in Q4. So in that case, income will not match with the Q4 and Annexure II. Yes, you are completely right. But in this case, whether we have, as we discussed earlier, whether we have TDS or not, we have to report the income from Q1 itself. I'm not sure how you did for the last financial year, but at least from this financial year, you please start reporting your income from Q1 itself. If you don't deduct TDS, also just report the income for all quarters so that your income will match finally when you file your Q4 returns. So for this year, either you can report all your income in Q4, or you can do the filing for the previous quarters. Either of this will work for you to match the income. But please match the income, otherwise employees will face issues. We recommend you to report in the respective quarters, but please, see how it is possible from your end.
I think they can do correction filing.
If they have done a filing, they can correct it.
Yeah.
If you have already filed Q1 return for some employees and you have not included for other employees, you can now add the other employees by doing a correction. Or if you have not filed Q1 returns at all, then you can file it now, but I think there will be a penalty for that, for the late filing fee.
But please do seek a specific professional opinion before taking any step. Wonderful. I think a lot of you guys have been very kind enough in asking questions, and it is 12:21. So guys, if you don't have any further questions, then maybe we can close. Oh, thank you, Mr. Vijendra. You have always been so kind and abundant in your praise. Very kind of you. Very kind of you for Sudarshanam as well.
Thank you, sir. Thank you, Mr. Vijendra, and thank you, Sudarshanam, sir.
My question is also same also. Hey, can I add total income in Q4 instead of correcting Q1, Q2, and Q3?
With respect to this question, if you have already filed return for Q1, Q2, Q3, it is very much recommended for you to do the corrections in the respective quarter, because employees can able to see how much they've earned quarter wise. So when you issue the Form 16 Part A, it will be easy for them to match with their payslip, so that you can reduce your employee queries. Yeah, and in 26 AS also, employees will see all together in Q4 period. So it's better to do it in the respective quarters.
So Darshanam sir, yes, we will share the presentation to you, sir, to everyone.
Within a day, you will receive the presentation. For all of you, we will be sharing the presentation of this webinar within a day's time.
Oh, Mr. Chaitanya and Mr. Pramana, thank you very much for your attention and for your time as well. It's been long that we have met. I think I'll find some time to meet you guys very soon.
Thank you, sir. Thank you so much for presenting on this webinar. Okay, I think the questions are over. So thank you very much for everyone joining us joined us for this webinar, and it was a great time that we can able to see participation from everyone. If you have any doubts or clarifications with respect to this subject, you can always write to us, or you can always reach us. Yeah, thank you so much. Thank you, everyone.
அங்க இருக்காரா?